This is a very timely question. Now, we dealt with this issue back in the March and April issue of our electronic newsletter back in 2012. At that time, we were very clear that we were simply expressing our opinion. As HUD had not published an official policy, there was no clear-cut right or wrong answer. Now, admittedly, there were many in the industry that chose a different answer from ours. Since there is no official guidance, it fell to monitoring agencies such as tax credit state agencies to make a reasonable call, and therefore policies differed from state to state in some cases. Fortunately, we're able to report breaking news on this issue. This is because on February 27, 2013, HUD spoke to this issue finally officially in writing in the RHIIP listserv notice. Now, the context was debit cards for Social Security recipients, but the principles applied to debit cards in general. Now, we're not going to restate everything in our earlier articles and encourage interested readers to look them up on our website. They give a lot of relevant details and examples on the issue. The HUD guidance does not add or change anything to what we stated back then. Here in this video, though, we will just give a quick overview. Basically, a debit card represents one method of access to a lump sum of cash. In the case of a savings account, a debit card represents access to the money in the account. Perhaps a paycheck from an employer or Social Security benefits goes into the account. Per long-established HUD rules for affordable housing programs, we count the paychecks as income and the balance in the savings account as an asset. Now, with that savings account, we may be able to access it several different ways, including the debit card. The problem with a growing number of income sources is that the money goes into an account that only has one point of access, a debit card. The new HUD policy guidance makes it clear that it's HUD's policy to count the current balance of the account as an asset, as well as the stream of money into the account as income. It's not double counting the benefit income to do so, and it represents an approach that is consistent with how we address other assets. Again, we encourage you, if you have further questions, to look up our March and April 2012 newsletters on our website for further relevant details and a couple of frequently asked questions surrounding this issue. We hope that this official HUD policy encourages greater consistency in approach to tenant income calculations, especially between state tax credit agencies that developed different policies in this regard in the past.